iṣẹ́ akíní yẹn kò múra. Bí ìfẹ́ ní bọ́dí sọ̀rọ̀ mọ́.
Èmi lè bá
Kọ̀lì kò lè wọ́n rìkọ́dì.
Bí a kò dé máa ṣe é for the purpose of my
Ó ṣàṣó jà.
class.
Ẹ̀ ṣe ètò kò múra jàre. Àwọn bí n child. Ó lè sọ̀rọ̀ sí ìkan tọ̀.
Class.
It's a class. So. Mo ṣe record.
Wọ́n record. Èmi lè ṣe èmi ti adjust ẹ̀ so to do everywhere. Put the screen please.
So I think we stopped at Tommy? Okay, so I sent you this one
Yes.
last week. So
Why is that?
key conferences in trading. First thing first, whenever you open your trading view, you notice that we want to get a particular what do you call it, trend. Is my trend moving upward? Is it moving downward? Or is it ranging? Or a choppy market? So actually you know that forex market, or let me just say using the charts and patterns, is either the price is going moving upward or is moving downward, or we're having a choppy market, you understand, or which we call ranging. So but I prefer that as a beginner you need to trade using either uptrend or downtrend. But once you become a pro, and you can always get that maybe after 2 years of experience, you can actually trade the choppy market or the ranging market. I wouldn't advise a beginner to go for that because the trend is not going for a very long time. So it might just go up and you might not know when they start coming down. So, but if you are into the market for years, you can predict when the price is going to start moving up again. You know, it's not just like a zigzag, up, down, down. That's for choppy market. But it's going to be, if it is trending, you're going to be having what we call higher highs and higher lows. If it is coming downward, lower highs and lower lows. So I'm going to be showing an example of a trading market. So I always advise every beginner to always trade a trading market. You must ascertain where the price is going. Is it going upward or going downward? And I already told you that before, the first thing you need to do as a beginner trader, before you start trading or putting your money, first thing first, determine what trend the market is. Go to your forex factory. So that's what I want you to do. Determine which trend that market is. And I told you that you must decide on which, what do you call it now? Which what do you call it? Which pairs you want to trade. Now, are you trading the Asian session? Are you trading the New York session? Are you trading the London session or the Sydney session? Now, depending on your own time, you must have your own trading plan, have your own diary, whereby you can be able to what do you call it? Document what is good for you. What is good for you might not be good for me. Your own time zone, depending on where you live, might be different from where I'm living. So that time, and that is convenient for you for trading. Some people might decide to say I want to trade in the night. Some people say I want to trade in the morning. So, and you know the market is open 24 hours. What is the market opens here might be different from the timing we have in New York. It's different from the timing we have in London, the cities and Asia. So you can decide what pairs, and I would say this, that just pick 2 or 3 pairs as a beginner, so that you can be able to know the timing and be able to know the fundamental what do you call it, fundamental tools, or let me just say fundamental analysis that actually move the market, fundamental problem or fundamental issues that makes your market strength. Because without understanding the fundamental part, you just be trading by blindly. Oftentimes some people just go for the technical part. Oh, the candlestick, the chart patterns, my indicator, my price action. But me, I would advise that if you want to be a complete trader, you must put into consideration the fundamental part. Now, how do you go about the fundamental part? That's the reason why I say you go to forexfactory.com to ascertain the current trend of that currency that you want to trade. Do you understand that? What currency you want to trade will determine what fundamental analysis you need to do before going to your trading view, which is the technical part. Now, I want to trade Euro USD. I'll come to the market to determine what trade my Euro USD is at the moment. And there's some information. Now, for the past last 1 hour, the market is trending downwards. So this is a downtrend. You will always be right 98% of the time if you can decide on which trend. If you can say, okay, the trend is down, the trend of the market is downtrend, you will be right. That means that you want to sell for that period. Whether you're a day trader, a swing trader, a scalper, or a position sizer trader, you will always be right. Let me just say 98% of the time, because if the market is going downwards, which is downtrend, that means that you want to sell, even if you are going to be wrong, but you just be 2%. You understand? Depending on your own price action tactics that you want to use. Now, for the past 1 hour, the market has been trending downwards. The last 6 hours have been trending downward. The last 12 hours, it has been trending downward. So what does this tell you? It tells you that you want to sell for that day. And that means that whatever things you're going to be doing, you are not buying for that day. And you must go to check. And you already know that Euro USD, you've got your base currency and your quote currency. So you know that you are foregoing this USD to get euro. You are foregoing this dollar to get euro. Now this price is the price of 1 euro is 1.1022 of USD. You understand? That means that if you want to trade two USD, that means that this is going to be times 2 of this. This is my base currency and this is my what do you call it? My quote currency. So that means something. And what did I was talking about something about the fundamental part. Now, what information do you actually need? And I want to go to check down here to see if there's going to be a particular news on that, because more often than not, you know that you are trading USD, which deals with the United States of America. So what news do you have from America? So oftentimes I told you that any box you see that are red, showing red, means that you need to look out for an information and check the time. In the next 3 hours, there's going to be a particular news that is going to influence the market. In the next, that's USD average hourly earnings month per month. We are in the new month, so America used to do it. They give reports every now and then. So in the next year, there's going to be another news. They're going to be talking about the non-farm period, non-farm employment check. And another one is USD unemployment rate. All this news you are seeing showing in red box has an effect on the technical in the market, in the technical part. So some people just trade the technical part blindly, but I would always suggest that if you want to be successful in trading and be more profitable, you must put into consideration the fundamental part of every analysis whenever you are trading the forex market. Not just the forex market, the stock market, the crypto market, and just mention index market. You understand? Because all this is actually going a long way. So we talked about choosing a particular currency pair that you want to trade. Now, in the next 3 hours, this is Euro USD. I think their bank opens what time?
In
US, yeah.
Should be around 1:30 to 2.
1:30 to 2, yeah. So that means that when you look at your own time zone and you want to know when you want to enter the market, depending on your own timing here in Nigeria, now you must be able to. Let's now go back to the trading view now. Though the market is moving, but for me, I'm not going to trade the market yet. Do you know why? I'm going to wait till, though the market is trending downwards, this is an obvious downtrend.
Just like the chart.
Just like the chart has shown us in the Forex Factory, that the overall trend for Euro USD is a downtrend. But as if you want to be successful in trading, I would suggest that you must have your own timing. You don't just go to the market and start trading, bro. You must be able to ascertain your own timing. You have to be in a good mood, and exactly to me, in the next 3 hours there's going to be a particular news, and I think here in Nigeria our timing is 10:21. Next 3 hours is going to be around when the bank is going to open, maybe 1 or 2 o'clock. So that is when I would suggest that you trade. You know why? Number one, we already have 3 news coming out in the next 3 hours, so which is going to coincide with when the trend, coincide with when they're going to open the banks. You understand? In USA, and you are trading Euro USD. Now this means that there's going to be high volatility in the market. That there's going to be a clear movement. To me, I would say that this is not a clear movement, though it's trending downwards. But what I used to tell my students is that you already know that whenever a market is trending either upward or downward, there's what we call impulsive move and there's what we call retracement. Now, oftentimes I try to trade the impulsive move. What's the reason? It's because you're going to have a clear movement of downtrend that is going to show. If you're going to be risking, let's assume you want to risk 20 pips, then you can actually catch not less than times 3 of what you want to risk, like 60 pips. So from each movement, you are going to see a very clear movement. There's going to be high volume of trade at that time. There's going to be high volatility in the sense that it's very, very fast. Everybody are on this, or you are ready to trade. The banks are open. You understand? Not that you just want to trade. You can see this type of trade. This is the reason why study shows that 80% of forex traders, beginner forex traders, quit at the end of 2 years. What's the reason? And they will have lost a lot of money. The reason being that they lack the knowledge and the technical know-how of how they can actually go into the market. You can't trade something like this. Some people trade it anyway, but for me, I have my own system or way of trading. You must have your own trading plan, like I said. I can't trade this. But there are some people that can trade this, but for me, I'm not going to trade this. And I know some people that will not trade market like this because there's no clear movement. Because it's looking like it's beginning to get choppy here. You understand? But to me, I would suggest that you wait till that time when the market is going to open. The market is open anyway, like this, but some people can trade it, but I don't trade it. But you must have your own trading plan, whereby you can decide when you want to trade, the currency pair you want to trade, what time you want to trade, the day you want to trade, the mood you are going to trade, the amount of pips that you want to look out for, the amount of stop loss that you want to give out, and your risk to reward ratio. So that's being said. Now, how do we now go for the technical part now? How do we go for the technical part? Now, one of the things I'm going to do, like I said, that I'm going to look out for my psychology level. I'm going to look out for my psychology level. I'm going to look out for my psychology level. I'm going to look out for my key levels. If you want to trade the forex market, now what are the psychology levels? These are levels whereby individually we tend to react to things as a human being. My psychology, or let me say every market woman or a trader, normal trader in the real sense of life, if you want to sell any item, you are going to round it off to a particular figure, not just saying I want to sell 39999. I want to sell this smartphone. No, nobody will do that. Except you want to go and buy in Spa or whatever, or maybe supermarket. You pay 399.99. No, but individually as a human, if I want to buy this mouse, I say, okay, can you pay 3,500, or pay 3,000, or pay 3,550? You always want to round that figure up. I will not say 3,000, 5,000, 3,598 naira point 56 kobo. No, I'm going to round it up to a particular figure. And you that want to buy the goods, you're going to say, 3,005. I don't have 3,005. I have 3,000. Psychologically, who instructed us to? Who instructed you to use 3,000? Because you know that is the best way that you can actually round off that figure. The same thing applicable to forex. There is always a psychology behind it, because you are referring to human that are trading now. Because every candlestick you are seeing here can actually be referred to every human being. Like I used to use this word, volume. Volume. Every candlestick you are seeing here, one after the other, it's not just a candlestick. It's the reaction of everybody that on this platform. Now, every human being tends to react on every psychology level. Be it the banks, because the people control the banks. Be it the insurance company, be it the hedge funds, be it the retail traders. We tend to react at a particular level. Now, we have 1.10290. You can see that at this point, the price begins to come down. At this point, because it is the psychology level. This figure makes this price to begin to come down. You will notice that at every psychology level, we can look at another one, 1.10340. At every psychology level, there's going to be a reaction. At every level, there's going to be a reaction. Let me use the word psychology, not level now, because I'm going to talk about key levels. Key levels is different from psychology level. At every psychology level, expect a reaction from the market traders. So number one, you already know that, okay, I have my trading view set, I have my currency pair set, and I want to become a day trader, or I want to become a scalper. You know that you already have all those things sorted out. Then you already know that whenever you open your trading view, your chart, you want to look for a reaction at every point. So that's the first thing you want to do. You know that, okay, at so level, and how do you just get to know that? You are going to draw your psychology level. I'm going to draw your psychology level. I'm only teaching you how you are going to do this now, so that you can be able to do that yourself. And you are going to get closer to the current market price. The current market price is very, very important. That's why you're going to start drawing your psychology level. The current market price. Where is the current market price? It's at this junction where the candle is going up and down. Can you see? So that's the current market price. So you just decide that you're going to click on this. That's my current market price. So you are going to. So the current market price is at 1.10269. So now, how do you round this off now? So let's round it up to 1.10270. 270. Or should we just say 1.10 300? Let's use what? Let's just use 300. So it's easy for us. So that's it. Then you can lock it so that it won't move. That's how to plot. Are you there?
Yes.
So you can start doing it on your laptop. So that's my psychological level that is closer to the current market price. So that means that if peradventure, are you there? This what do you call it? The price eventually gets to this point, there's going to be a reaction. You understand? So just want that. So and the reaction, then your price action skews will now determine whether it's going to go up or it's going to come down. That being said, from every psychology level to another psychology level, we have what we call a sub-psychology level. It has to be 100 pips. From one psychology level to another psychology level, it has to be 100 pips. Now, so that it's easy for us. So I'm going to have a sub-psychology level, which I will use red. So that you know that this is my sub-psychology level. I'm going to just draw 4 lines, so you can just. So you go here to take a ruler to measure but from the main psychology level to your sub-psychology level, it has to be 50 pips. Are we together? So how many pips is this now? You use that ruler to measure how many pips. So from here to here now, okay, I think that's 15. I don't know now. 50 pips should be around here. So that's 50 pips. So from 300 down, are you there? So I'm going to say 350. Don't forget I said from one main psychology level to the sub-psychology level is 50 pips.
Yes.
That's 50 pips. Then you can lock it. Oh, it's going up. Okay. Let me draw another line. Sorry, please. I need to get this very, very fast. So, from the main psychology level to the sub-psychology level, how many pips? 50 pips. So the main psychology level that we actually did the other time is 300.
Yes.
So I've locked it in. Have you locked it?
Yes.
We have. Are we sure we have done that? We didn't lock this. Let's lock it. Then from the to 350. Okay, let's go back because that's where the current price is. 250. Okay. going to explain it. Just, so that's it. So, from one psychology level, this is a psychology level, this is a sub-psychology level, this is another psychology level, and this is a sub-psychology level down. So let's put that. So another psychology level should be down here. But because we don't really need that, so I'm just using this to explain so I can move to understand the psychology level from one psychology level to another. Now we already have 3 psychology level. So now you can see that there's a reaction here. You can see that there's a reaction here. So from one psychology level we have 1.10300 to another psychology level which is 50 pips. Let's measure it so we'll be sure that it's 50 pips. You pick your ruler here. Pick your ruler. We are going to measure from here. I'm going to measure from here down to this place. So we have 50 pips. If you look at it very well, we have 50 pips. So that being said, you can measure from here down to this place. From one psychology level to a sub-psychology level is 50 pips. But from a main psychology level to another main psychology level is going to be what? 100 pips.
100 pips.
Yes.
Sorry, how did you get the 50 pips?
So you come to pick your ruler here.
Yes.
So then you are going to measure from up down to this place.
Okay.
So we want to ascertain 50 pips. So now, as a day trader, I usually advise that it's very easy to trade. You already know that once your price gets to this place, there's going to be a reaction. Okay.
In this write-up now, how did you? Okay, that's 0.00050.
50, yes. That's 50 pips.
Okay.
Yeah. Are you there? So that means that the price is going minus 0.05. When the price is going down, the price is decreasing. So that's minus. You understand? If the price is going up, it's going to be plus 0.05%. You understand? I'm going to explain that maybe probably in another class. The price percentage, pips, lot size, what do you call it? Your base currency, your quote currency, and ask price and bid price. I'm going to explain that maybe in another class. So those are the fundamentals of trading, but just this is the technical part now. That being said, are we together?
Yes.
So that being said, we already understand that whenever now that I've drawn this psychology level, I need this to look up, please. Sorry. So as soon as we've drawn this main psychology level and this sub-psychology level, there's always a price reaction. Now you can see there's a reaction here. So you already know that, okay, if I'm going to go into the market, then you must ascertain how many your what do you call it, time frame, the time you want to trade. So you know that from here to this place, is it going to be 1 hour or 15 minutes? You understand? Depending on the candlestick time you want to use.
Okay.
So like this candlestick we have seen there is the 1 minute time candlestick. So you want to know that you can see that this price is trading up now. So I'm double sure that as soon as if this price eventually gets to this point, it might not fall. There's going to be a reaction, maybe a power tussle that should we keep going up or we should come down. But you do know that if this price eventually, and we are going to put into consideration key levels, because there are some levels that might actually keep this price downward, because you need to look at your previous candlestick. Why is this thing going down? It's not just going down because it's going down here. Something that has happened in the past event, historical event, to make this price going down. But if you can be able to see that there is no obstruction, that there is nothing that is hindering this price, there is no key level that is hindering this price to keep going up, then you can predict that this price will keep going up till it gets to this place. And the amount of pips that you want to actually catch from the market, once you have measured it, you already know that this is from here to here is 50 pips, and it is a covetousness to say you want to get 100 pips as a beginner. It's only the banks, the hedge funds, insurance companies that trade for it that can get 1,000 pips in just one trade. 10,000 pips they can always get it, because they have large funds and they have professionals that have been in this system for a very long time. You are just starting, so you cannot just say you want to just catch 50 pips, 20 pips, 30 pips, leave the market. But as time goes on, then you begin to get experience, then you can be able to predict that, okay, after this place I know that this price is going to react. You understand? Your experience will actually teach you that. So that's the matter. So from this point, you know there's going to be reaction. Now you can see that there's a power tussle here.
Yes.
There's a power tussle. Even on this psychology level, you must understand that at every psychology level there's going to be a power tussle. Can you see it?
Yes.
They want to go up. Some people are saying no, you have to come down. You understand? So that is that about this. That's about psychology level. Now let's now go to key levels. I think you understand psychology level very well now. So let's move to key levels. Now the next one is key levels. I'm going to talk about price action. Maybe that's going to take a longer time. Now key levels are levels whereby the price has touched multiple times, 2 or 3 times. If that's our psychology level, key levels can actually be a psychology level too, but oftentimes it might not be. It might be in between the psychology level, the main psychology level and the psychology level. It might be in between. You can see that when we did this one, when we came to this one, the price was having a kind of reaction from this place. A reaction from this place.
Yes.
And this place is not a psychology level. This might be a key level. Look at this rejection from this place. There's a rejection here. Whenever you see a candlestick that has a wick, is a rejection. The price is actually going up, but the sellers are rejecting it. So that's why you notice that they are pulling it back. You understand? So it's important that you note this, and there should be a reason why there's a rejection, and it might be as a result of this same psychology level that has 280. From here to here is 50 pips. It might be as a result of some people might actually draw their own psychology level here too. So not necessarily a psychology level that actually causes this rejection. Might be anything. So key levels are different from psychology level. Now key levels now if you look at, let me go backward to historical events that has actually transpired from this side to see what we call a key level. I'm going to talk about the support and resistance in a while now. So key levels are points of I can use the word point of price either reversal or continuation. Okay. There's a reversal, it might be a reversal or a continuation. There's something I want to tell you. In trading generally, 2 things will happen. In trading generally, whether forex market, whether cryptocurrency, whether stock. If you are trading using the technical part, using my trading view and all that, just know that 2 things might actually happen. You already know that we have 3 types of market trend. It's either we have the uptrend, the downtrend, or a ranging market or a choppy market. Now, let's pick the uptrend. If the price is going up, you already know that we are having higher highs and higher lows. I'm going to use a pictorial example so you can know what higher high. This is what we call higher high. You can see it. This is higher high, higher low, higher high, higher low, higher high, higher low. Can you see that? This one has not broken. So this high must break the previous high for it to call it higher high.
Yes, it has to go beyond it.
It has to go beyond it. This one has not gone beyond it, so you cannot predict this as higher high. So this one has gone beyond this. This one has gone beyond this. So this is an higher high. So you can categorize this as an higher high. So this is in a perfect this is a perfect uptrend. Now, the price has been going up for a while now, and there's a kind of reversal. Price reversal. Don't forget that there are some key things that can make the price to reverse, which I've talked about the psychology level. Not just psychology, and in trading, you don't just pick one what do you call it, strategy and use it. There has to be a confluence of 4 or 5 what do you call it, strategies that must occur at the same time before you can decide.
It's going in direction.
And it's going in that same direction. I call it confluences. That it's either your support and resistance, it's either your indicator. I'm going to put in an indicator now. It's either your indicator, it's either your price action, it's either your chart patterns, it's either your candlestick come at the same time. Then you can decide to place a trade. You understand? Not just placing a trade blindly. You must be able to, all those 5 countries, at least 4 out of 5 must come out to be sure that okay, and your experience to actually tell you, oh, this market is going to come down, oh, it's going to go up. You understand? So that being said, we already know that this price is meant to keep going up, right?
Yes.
And it's coming down. Don't forget, I said 2 things must happen in trading. Whether you are trading forex, crypto, whatever, is either the price continue, that's what I call it, price continuation, or price reversal. It's either keep continuing, the trend keep continuing, or it's reverse. Whenever you want to enter a trade, you must know that 2 things must happen. It's either it continue. Now you notice that now we already have an higher high here, and normally you must expect another higher high. You must expect a kind of retracement. This is a retracement. All those red candles you are seeing is a retracement. Can you see? It's a retracement. It needs to retrace down to a particular level. I'm going to use a particular tool. What do you call it? We call it Fibonacci, whereby I can be able to measure the strength of that retracement. You can predict that this previous retracement was at a particular level. Then predict that the next retracement is going to be at the same level. There's a particular overall level that we used to look at for. We look at for 0.38. We look at for 0.68. Look at for 0.50. So as soon as it touches any of those 3, 0.38 is good, 0.50 is great, and 0.68 is best. And once it gets to that level, you get to 0.68. If it goes further, then you must have it at the back of your mind. It's like this price is not going to continue. That there's a reversal that wants to happen. Once it's, let's use our Fibonacci tool so that I can, so you understand what I'm saying. Now you pick your, although I have it placed as my favorite here, but you can actually pick it here. So we can, maybe I'm going to show you that later. So
Under indicators.
Under indicators, yes. No, it's not even indicator, it's a technical tool. So that's my Fibonacci. I'm going to, okay, in the uptrend, sorry. So you're going to place, you're going to hold on to the indicator, then move to the left, so to the right rather. That's in the uptrend. Just hold on. Let me delete this. I'm not sure this one is going to work here. Let me look for. Let's use this. Have you picked the tool?
Fibonacci.
Yes. Come to this place. Can you see it?
Yes.
Just hold on. So I'm going to go down. Okay, it's not here. Sorry, please. So have you seen it? The third tool,
That's the Fibonacci.
Fibonacci. Have you seen it?
Yes, I've seen it.
Now, in the uptrend, once you have picked that tool, you click on your mouse, then drag it down in an uptrend. Drag it down, then sideways. Down and what? Sideways. Did you get that?
Yes.
Side.
Now I'm sideways.
Then that is then leave it. Then you can just lock it so that it will not move. Now, you notice that from this point, are we together?
Yes.
From this point down to this point, we call this tool Fibonacci retracement. We want to measure the strength of this retracement, and we already have a zone, because I call it zone, it's not a line, it's not an area. So it must not be a picture perfect analysis. Just look for a particular zone. Now you can see that at this zone, hold on. Let me see, I think we should use this is okay. .18, 0.5, 0.3. Let me use this one. Delete it. Sorry, in a uptrend, you pick it from down. In a uptrend, you pick it from down. Are you there? You pick it from down, then up, then sideways. Then exactly where there is a weak rejection, I see that this price has ceased to keep going up. Can you see? This price has ceased to keep going up. There is a rejection. Can you see?
Yes.
So we are going to hold on and just leave it that way. Can you see? So that's the use of Fibonacci. Then you can just lock it up. Now let me analyze this. We already find out that the price, we've got an uptrend here, and the price has rejected. That means that you are sure that this price does not want to really keep going up, so they want to keep coming down. They look for a red candlestick, because in an uptrend you always have more of green candles, or in a downtrend you have red candle. More in an uptrend, more of green candles than little of what? Red candles. But in the downtrend, more of red candles than little of green candles. Now, in this in this now, this uptrend, we already have a weak rejection showing us that this price does not want to keep going up, and that means you know that okay, now there's going to be a retracement because you already ascertain that this is an uptrend. Then you just pick your Fibonacci retracement tool from the second 2 here, then from down, drag it up, then sideways, then just lock it up. Once you lock it up, then come to this zone. You see that we have a 0.786, you know,
Yes.
and we have 0.618, and we have 0.5, we have 0.382. Now, if the retracement is in 0.786, you can see that at this 0.786 zone down to this place is the best. And like I said the other time, that from 0.382 is just good. 0.5, if there's a retracement down to 0.5 is great. Then from 0.78, from 0.68 to 0.7, expect a reaction for the price to keep going up. Expect a reaction for the what? Price to keep going up. That means that the retracement is not going to last in an uptrend. So once you have 0.78, now expect it. Now you now have a momentum candle that shows that oh, the retracement is over. Now this is a momentum candle. We have types of candle. I'm going to teach you the momentum candle, bullish engulfing, bearish engulfing, what do you call it now? The pin bar, the shooting star, what do you call it? Morning star, evening star. So I'm going to explain all those. So maybe I'm going to in a particular, maybe next class, talk about candles, and chart patterns. Now, we already have a momentum candle that actually showed us that the first thing that you look out for is that 7.8% of the Fibonacci retracement has already shown us that the retracement is over, and there's now a confirmation with a green candle that this price will keep trending up, and the momentum candle shows up. Then you need to enter this trade at this point, but some people will actually enter here where you notice that at this point there is a rejection from what they call the Fibonacci retracement, that the retracement has already gotten to 0.782. Some people will enter at this point, but to me as a beginner, you must have extra confluence. Like I said, your candlestick, your technical tools. I'm going to put up an indicator that is going to show you that you need to enter at this point. Let me put it an indicator so we can match all those confluences together. Now, what indicator should we put down at the moment? Let's use stochastic oscillator. Stochastic oscillator. Yes. No, just do it once. What is it? Really? Oh, but no, let's just use this then. We'll know what to do after the class. Are we together?
Yes.
Now, in your stochastic oscillator, we have what we call the sold. Are you together? And the overbought. At this point, we have 3 lines. We have the oversold line, which is always what do you call it? Maybe 20. Some people use 30. Some people use 70, yeah, or they use 80. You understand? Once your price gets to this line, you know that it's overbought. But now, if you look at this point, are we together? You notice that the retracement has already gone into 78.2%. The same thing as 0.782. 78.2%. And what happens here?
How am I going to know?
No, because it has gotten to the oversold area.
So
as soon as it goes beyond this line, is an over. Expect that this price, it just goes further. Will it start going down? No. Once you get to the oversold area, you are sure that you already have a confirmation from your indicator, you have a confirmation from your Fibonacci, you also have a momentum candle springing up, showing you that the price will keep going up now. 3 conferences. And some other things like your price action, you have gone to your fundamental analysis, you've gone to your trading view, your forex strategy to determine that the price is an uptrend. You know that you will be right 82% of the, or let me just say 92% of time.
I have a question. Which is yellow candle and which is blue candle? Which one do I need to
But now you are going to look out for the blue candle. The blue candle, sorry, the blue line rather. The blue line is the RSI.
Okay.
Why the yellow line is the signal line.
Okay.
So this is my RSI, this is my signal line. So and in an what do you call it? In an uptrend too. Sorry, this is a retracement. The blue line must be below the signal line. The RSI must be below the signal line.
In an uptrend.
Sorry, in the retracement. This is an uptrend. Forget about the trend now. I'm talking about the retracement. It's coming down. It's going up and down, up and down. Now we are talking about the retracement now. Now the retracement has actually gone from up down to what we call the oversold area, and it will never move beyond this place. Once you see that it has moved to the oversold, it has gone beyond this line, and this blue line, yes, this blue line, which is the RSI, has actually moved up below your signal line. Then be sure that the price will keep going, and you already have a candle. If you look at that, is showing that it want to keep going up. Now the candle it has crossed this signal line that is going up. Then you can enter from this place.
You should, for better
entry.
Wait for it
to close. Yes.
To close and move up.
Exactly, to move up.
So we match it up with whatever
candles you have here.
So once it has gone
bullish
above this line, this will most definitely be bullish.
Yes.
So then we can go into our trade.
Yeah.
Okay.
So I need you to know that some beginner trader, with time, with experience, you notice that for me, as soon as I see that it has reached the oversold area, I may not even wait till, or let me just teach you as a beginner that you need to just wait for the next candle.
Okay, what you are
to give you extra confirmation.
You just pick up your.
I'll pick it up from here. Yes, because I already saw that it's going up already, and it has actually gone beyond this line, which is the oversold area. In an uptrend, overbought area. You understand? Overbought area. I already know that okay, this is going to be going down, coming down. So I'll place my trade and I'll keep it. But you can see that it keeps ranging. Did it come down?
No.
It keeps ranging. So not, and I need you to note that because it has reached the oversold area, does not give you the ample chance to keep going to your trade. You have to look for a candle stick formation to confirm your trade, to confirm your entry. But now, are we seeing any candlestick formation that confirms that we need to sell?
Not yet.
No. Is there any candlestick that is showing that the retracement is going down? No. So it's floppy. The market is going choppy.
So I think that is this range.
That is this range. Can you see? So even up to this place, you can see that it keeps going up and down. So for me, I'm not going to trade this. I only trade the impulsive move.
So for a beginner like me, moving on this entry,
okay,
and from here to here, I should be out of the market when this point to this point.
To this point, as soon as you are getting to your oversold area, be out.
So what?
And mind you, depending on how many pips you want to catch. Now, I already told you that from here to this place is a 50 pips, right? So I want to just catch. Let's assume that I just want to catch 30 pips, and 30 pips is a lot of money. If you do the calculation, I'm going to do the mathematics how you can multiply your pips with your lot size and everything. I'm going to do that later. So 30 pips, depending on your account size, you might get nothing less than, depending on your account size, you can get thousands of dollars even from here to this place. You understand? So that being said, so I already talked about the stochastic oscillator. Let me use another one, which is let me use MACD, moving average, convergence, divergence. That's another. Or should we use TDI? TDI.
No, let's do everything if it's possible.
Okay.
I'll pick the one
The one that you want.
I'll pick the one I want.
We should use let's use TDI first. TDI.
TDI what?
TDI. Traders Dynamic Index.
Plus RSI divergence.
Yes, plus RSI divergence.
Yes,
Now,
yes,
are we together?
yes,
Now, if you look at, are you there?
yes, sir.
Now, if you look at, what do you call it? This is my TDI now, and this is my stochastic oscillator. At this point, you notice that these two blue lines is my Bollinger Bands. This yellow line is my MBL, market baseline. This red line is my signal line. Then this green line is my what do you call it? RSI. Can you see it? Now, as soon as the RSI crosses, and okay, I've got the overbought area, and I've got the oversold area. You understand? These two lines, overbought, oversold area, and I have the median in between here. Same way we have it here. So when the market is choppy, it ranges around this area. So if it's going up,
this yellow indicator is
market baseline is market baseline showing us the strength. Now, in my overbought area, I have 65.31. In my oversold area, I have what do you call it? Oftentimes 20, 30, depending on. You can actually change all these figures depending on you. You understand? So for me, I used to use 80-20. Oftentimes I use 70-30. For my 70 for my overbought, 30 for my oversold. You understand? So oftentimes some people use 70 here, 50 middle, then 30 oversold area. So now we already have two indicators giving us now if you want to use this TDI, your RSI must cross the signal line. You can see that it has crossed the signal line up to this point.
Median.
Yeah, it has crossed the signal line is a red line. So my RSI has crossed the signal line up to this point, and it keeps going up. Can you see?
Yes.
But though it might not give you the same vibe with the stochastic oscillator, there are two different indicators. But what I will just tell you that use this RSI as soon as it has crossed this signal line, then you know that it's about to start going up.
Okay.
You understand? But I'm going to give you a clearer picture. So, because oftentimes
this one is not giving the
same as this,
but this is going down, showing
overboard. Yeah.
So this is just slightly above the median.
Median, yeah, I would say slightly above the median, and that's because this is a different what do we call it indicator. So another indicator will show us overbought and oversold, but you know there are two different people that actually do this indicator, so you can't use this, but it has actually given you a confirmation. You can see it like this. It has actually crossed. This also has to cross this signal line. You know, this RSI has crossed the signal line. Then at the median, you know, then before you start going upward. So that's for the TDI. I'm going to cancel this and use RSI now. We're using MACD. That's moving average, convergence, divergence. I'm just only treating three indicators. Then maybe in the next class. Let me treat moving average indicator. Moving average is not an indicator anyway. It determines the trend and all that. Let me just use this thing. MACD. Moving average, divergence, convergence and divergence. So this is another indicator. Now we have this the histogram. Are you there?
Yes, sir.
And we have the what do you call it? The RSI too, and we also have the signal line. Now it has crossed. Okay. Let me see where. Okay. Here it has crossed. The RSI has crossed the signal line, moving upward, and now we already have the histogram showing us that a strong uptrend is about to happen.
So
You
the
can see
strong uptrend is a bigger candle.
a bigger candle. Can you see showing us? But as soon as the candle is decreasing, it's coming down. It's decreasing, then it's showing you that
It will fall.
the trade is coming down. So you instantly start closing your trade. Closing your trade. Otherwise, you are going to keep losing. You understand? That's for the moving average, convergence, divergence. So let me leave that on the chart. Then go to we've talked about okay. There are some things we need to actually look out for at the moment. Let's see if I can be able to have enough time to do that. So we've talked about the key. Okay, have we talked about key levels?
Yes.
Okay. We've talked about psychology level. Then let's talk about. We've talked about indicators. Let's talk about the support and resistance zone. Support and resistance zone. Support and resistance. Support and resistance. And there's some technical tools I need to. But okay, I've talked about the. We've actually used 2 or 3 technical tools. The psychological line. You can actually use it. We call it the horizontal line. You can actually use it as what do you call it? Your support and resistance line to draw your support and resistance line. So let's look for a price that will actually show us.
We can clear all this off. So
Yeah, I'll do that. But let's leave it there. I'm going to check for support and resistance. You actually get that from previous charts. All these charts you are seeing there are historical charts which can actually teach you how to determine the move of the market. I'm not seeing clearer moves, but let me see. Let's go to the next one. Okay, I already drew this psychology level because said that I only trade like 4 currency.
which are the currencies?
They are always USD related.
GBP,
USD, Euro USD, USD CAD, USD JPY. How many is that? That's 4. Because I'm trying to, because you might find yourself in any of this country. You might find yourself in Asia, you might find yourself in America, you might find yourself in Europe. So you'll be able to adapt with their time. You understand? So I'm trying to look for where we can draw a support and resistance so that I can. All these things, everything you are seeing on the forex screen right now has actually happened. They are all historical events that will still happen again. Do you understand what I'm saying? So you can be able to. The reason I'm going back to all these previous what do you call it? Previous charts is because it has happened before and it will still happen again. So if you can be able to master the reaction of all these things, then it's easy for you to be able to trade the market. Let me just use this, but it's not giving me what I actually want, but let me just use it for training purposes. Let's draw. Do you see where I got my rectangle box from?
Not yet. Okay, yes.
No, I got it from my favorite. You can actually add it to your favorite too. So.
I don't have it.
Okay, I will show you. I'm coming. You come down here. Can you see it?
It's not even showing.
It's not showing there.
It's showing.
Or maybe after the class, I will maybe look out for it again. Can you see it? Although we're going to, this one is going to work for my trend line, but probably next class. Okay, I used it when I traded this. So you can see this trend line. I was the one I put it there.
Okay.
What's this?
Okay, I've seen it now.
So I can do this. Now this is my trend line. I'm going to because I'm not using the trend line as of today. Maybe next class I'm going to use trend line. So let me just remove it. I'm going to delete it.
I've seen how to use.
Are you on the same page?
No. I'm on GBP, I'm on Euro USD.
Euro USD. Okay, can you go to GBP USD? Can you? Yeah. So I want to treat support and resistance. Oftentimes, you notice that support and resistance are always good for choppy markets, and not just choppy market anyway. And you know, I said something the other time that if a market want to keep trading, we can predict that by your impulsive move and your retracement, which happens in an uptrend or downtrend. But in the case whereby the market is ranging or is moving choppy or moving sideways, you can always use a rectangle. I call it not just rectangle, I call it support and resistance. Resistance is a move, then support is below. So you want to know if there's going to be a reaction, and I can actually still call it my key levels. Do you know why? Now there's a reaction. If it happens 2 or 3 times, that means that it will still go down. Now it happened the first time, it happened the second time, and happened the third time. Can you see it? It happened the first time, happened the second time, happened the third time. You understand? But this one is not clear. But these two are clear. Rather. Then this two is actually clear too. Now if you come to this page, you notice that we call it the resistance. Resistance area. That means, okay, I'm placing a bar. That's okay. If there's going to be a reaction, looks like but it's not it's not a line. It's a zone. I call it area. So you are looking for a reaction between this zone. If there's a reaction between this zone, then we call this a resistance. And you can actually predict that the price will go down if there's a reaction. That is, if you notice that the price has been ranging, so it has been an uptrend or a downtrend for a very long time, and notice that the price is not continuing. You know, I said there's price continuation and there's price reversal. Now the price wants to reverse, and it might want to continue. Don't get me wrong, it might want to range, and like I said, in forex or using your technical tools like your trading view, the only time that the market trends in the whole 24 hours might just be 20% of all the market trends. It doesn't trend all the time, because if the market trends all the time, then that means that everybody will be making money, because we are sure that impulsive move, retracement, impulsive move, retracement, higher highs, higher lows, lower highs, lower highs, impulsive move, retracement. The impulsive move can actually be in an uptrend and a downtrend, but it can actually come maybe 20% of the time. So that depends on when you can be able to foresee and see when it's going to happen. That's when you notice that you can actually make your own cool cash from the market. But this is a ranging market. It's not moving up. Is it moving up? No, but it's ranging. And if you notice that the price has been going in an uptrend for a very long time, like I said, the market can only go 20% of the time out of the whole day. So you are sure that the first 10% you are online to catch that move, and once you start breaking or start ranging, you draw your resistance. You can still trade it if you are a beginner. I would say you should go away from it for now. Then but if you are a pro, or maybe you have experience, then you can actually trade the ranging market. Now, once you place these two, you see that there's the price hits this resistance zone and goes back, hits this resistance zone, come back. You can trade this, you can trade this. You already see that that's it. There's a price rejection, there's a weak rejection here. You can trade that this price is going to come down to this place, you understand, before there's going to be a reaction. Oftentimes you can get to this place, but if you are not too greedy, you can just pick, and from here to this place can actually give you not less than 50 pips from the market. Let me measure it so I can see. Or more than. That's almost 282 pips. Kilode? Opo. So it's just that if you are too what do you call it, greedy, that's when the market is going to eat you out. So at least you can be able to catch like 30 or 40 pips, it's fine with your money. 30 or 40 pips, it's fine. So you just believe that once there's a reaction at this zone, just carry 30 pips, then you're out of the market. You can trade it, but the pros can actually come down to the resistance zone. Experience is going to teach you that as time goes on. So that out of the way, that is how you trade the support and resistance. So whenever you see something like this, you notice, you'll be sure that there's two levels, like there's a reaction at two levels, at least two times. So couple times it can happen like this, up down, like 4 or 5 times. Some people can actually trade that.
When it repeats itself.
When it repeats itself at that same, you just draw these two things, which is your support and your resistance.
So when it hits support, when it occurs 3 times,
two times, minimum of 2 times.
Then I can.
Then the next one, if it gets, you know the direction.
Yeah.
If it has happened 2 times, you notice that it is not trending again. This market has been trending before, but now it's not trending. It begins to raid. Once it's raid 2 times, and don't forget, I'm going to teach you what we call a breakout. Breakout from what do you call it? A resistance zone, or breakout from the support zone. If it is going in an uptrend, it might raid for a little while, then break out and continue that price continuation, or if it's going uptrend, then it's raining for a while. It can the price might actually reverse and keep coming down as a downtrend. You understand? So, but how do you now determine if the price is going to continue or there's going to be a reversal? Then that is when you become a pro. Now, if you notice,
you have to include
fundamental analysis to know, will this price continue or is going to reverse? You understand? So but if you can be able to understand, but with time I'm going to teach just another strategy. This support and resistance strategy. Then the first strategy I gave you was the impulsive move strategy. You understand? There's another strategy that we call breakout. There's another strategy for trend line. There's another strategy for what do you call it? This support and resistance strategy. You understand? So there's so many strategies that you can use in the market. You can use your indicator and all that. So that being said, so that's for support and resistance. So let's see if you can still pick 1 or 2 things to learn.
Wait, I heard of this thing that I use. Can we go back to that trading view? Sorry.
Trading view, okay.
Let me just input something. I just want to see something.
Okay.
On indicators.
Indicators, right? Super trend, I mean?
Yes.
Okay. I'm not sure if it. Okay, let's see if this one has it.
Super trend. Yeah, it's there. Super trend. Oh, yeah. Okay.
said I want to use a moving average.
Yes.
Oh, sorry.
And
Super
check. I thought you want to do
Yeah, no,
yeah,
this class, don't worry.
Okay, super trend.
This class. Because that was going to take another time. Although I've not used this indicator before. So I just use, I think I use just 10 indicators.
Okay, super trend has done. So
Okay,
I'll
okay.
close it now.
Okay. It's
This one.
easy.
Really, it is easy, but I know it doesn't work.
Looks like a Bollinger Band.
But doesn't work alone.
It looks like a Bollinger Band. Okay.
This is what I use for that this in the trade I told you.
It's
So, so if you can go, if you can help me come to this live current market now. If you can go back to the current market. Visitors can see that in it. Everyone feel logic.
Normally, if it's to be, I'll just click on something, just go down. Okay, I will check. This is the current market price.
This is the current market price.
Now look at the story. Let me just explain something here. You can see there's a weak rejection. The
It's
price
the right now is a floppy market.
is a floppy market. That the price has been trending upward, but it doesn't want to go up, doesn't want to go down. So now you place your what do you call it? Your what do you call it? Support and resistance. Support and resistance. Then you keep checking. Then look at your what do you call it? Your, not just your MACD, your indicator, your RSI, your indicator, and wait for a breakout. There's going to be a breakout. It's not going to be going like this forever. But if you are
only on
Bro.
1 minute on
any time frame, any time frame, this is a 1 minute time frame anyway. But any time frame, you can see as soon as you draw your resistance and your support, you notice that, and oftentimes if the trend for the day is uptrend, 98%, or let me just say 50 or 60% of the time, it will continue as uptrend. So if there's a choppy market, but expect that the price will continue. If the price has started, if the trend for the day has started as uptrend, you are sure that
it's going
it will still go up. Well, I'm not saying that it's going to go, it might reverse. You understand?
Definitely.
But you can see what I'm saying now? Can you see what I'm saying now? This price, this has closed. Then you are, now if I have my reversal, sorry, if I have my what do you call it now? Resistance line here now, I'm sure that this thing might want to go up. And you can see the reason why there's a reaction here. Look at my psychology level. You can see there's a reaction on this psychology level that they don't want this price to go above 1.10300, maybe due to some fundamental issues that's affecting this currency, which is Great Britain pounds and United States dollar. You understand? So that is that. Now what do you want to ask? Which question do you want to ask?
Occurrence. So this is a three occurrence.
The first time
getting to this side to come down. It's getting here.
But I wouldn't want you to trade this because this is not a clear ranging market.
I understand.
But it's not a clear ranging market. You can only trade a clear ranging market whereby you see that the green goes up, the red comes down. The green goes up, the red comes down. You understand? That's a clear ranging market. It's something like this. Okay. So you want to ask a question concerning this super trend?
No, there is another one they said we should add to this super trend. Like super trend now, if I'm going to use super trend, I will use about 3 of it.
One thing I want to say about this super trend, because I'm using it for the very first time, means that what I'm saying is whenever the price is above this line, because I've used moving average very well severally, so I can be able to predict that whenever the price is above this line. Now that means that we are sure of all trend. Now look at this place now, the price is below this. This is you can see it, the price is below. You understand? The price here is, these are the prices above this super trend line.
Yeah, the thing is, this single super trend line is going to give you just one clear. And the crazy part about super trend line is not alone is this: you cannot use just one super trend to be able to determine the market. But super trend will always give you either up or down. But it will never tell you when the market is trending,
yeah.
floppy, and doing any other thing. So either I give you a bullish sign, or if you look at this side
The
now,
very
this
side.
is not a sweet breakout at all.
At all, yes.
It's not a sweet
At
breakout,
all.
but it will give you a sell sign.
Sell
because
sign.
from this point to this point, it's sold.
It's sold, yes.
But then look at this side. Even this side too is still on the floppy range.
And
is
it's
not
showing a sign of buy.
of buy because it is looking at this side. So if you have entered on this side,
You will lose your money.
you would have probably on buy on this side
If
you
you
have made money.
made money, yeah. If
But getting here, you can get in and then it will fall.
Fall,
So
yeah.
whatever you are picking from there to here is not a good margin. So that's
So
what
to me,
you have to use this pattern now. For what I learned, though, you have to use like 3 of it, then change this compass. Then you now say when the 3 hit at the
Combine.
same time.
and there's something I want you to understand about indicators, because I have some pros that will tell you that they don't like indicators, that indicators does not work. You understand? But to me, as far as I've been trading, I found out that some indicators work.
Supporting it with
Yes, that will give you clear vision of where the market is going. But to me, I've not used this anymore. I've not seen a clear vision using this.
this one, Dima,
Maybe,
Chimiko.
yeah, maybe you need to change some settings here to
Yes.
give you the right result. I don't know, but maybe probably I will try it after today.
I'll send it to you.
So that's it. So let's end the class so that we'll. But in the next class, I think we're going to be discussing on some other key items like my chart patterns, my candles patterns, my supply of demand zone.
Technical
some
tools,
other technical
online,
tools.
Fibonacci, top down Fibonacci, yes, my shape on it. Before
Maybe
we
next
start on
class.
it. This is like rounding up of the class,
Mm.
based on
Alright, so-